Welcome back to CryptoWealthy channel, guys. In today's video, unfortunately, Bitcoin broke to the bearish side, so we can discuss about this correction. I need to mention a few things that I mentioned already in one more video, how deep this correction could be. Now, if you're new over here, don't panic. This is totally normal in markets, and I'm about to explain you why is this happening. So make sure to hit that like and subscribe button and follow me what I have to say. I'm going to try to be as short as possible, so your focus will be the biggest one over here. And now, let's begin. So in today's video, we're going to be doing just technical analysis on the Bitcoin and the Ethereum very quickly, because this is the most important thing in the crypto market. All other altcoins are in red because our daddy over here and Ethereum, including the Bitcoin, is in red. So there is no point to talk about altcoins. If the Bitcoin is negative, then the altcoins are going to be most probably the same thing. So as you can see over here in this triangle, we discussed that sometimes happened that the Ethereum breaks out first from some of the pattern, then the Bitcoin is following. In this case scenario over here, Ethereum managed to break bullish, as you can see over here, but the Bitcoin did not follow that move. So in this case scenario, we have detachment right now again between those two, and also something is wrong in the market of the Bitcoin, which means it seems like that we are slowly retracing into the correction. It seems like that the Bitcoin will maybe start right now that correction that we discussed of Elliott theory wave 4 Elliott theory. So right now we retraced over here, if we measured all together, to the 28-30%, but it seems like that the Bitcoin still after that dump over here, or let's say correction, did not manage to make the new all-time high over here. That basically means that the something is slowing down the market slowly. Of course, those are bears who are taking profits all the time, and it seems like that the Bitcoin will see one more correction, major correction. I would personally really like to see wave 4 play out, so I can also buy cheaper Bitcoin, and after that we will spike towards $50,000, 60 or whatever. Now the reason why this is important is you don't want overextended Bitcoin. Whenever the Bitcoin overextended, it even didn't follow just those numbers in the Elliott theory, like 50% retracement or 60. It went way too deeper, like 80% or whatever. So this is the reason why this is good to see retracement of wave Elliott theory 4, which is 30, 40 or sometimes even 50%, depends how much Bitcoin extended itself towards the all-time highs, right? Now, not to talk too much over here, your question is, so how deep should we go? As we discussed in one of these videos over here, I urge you to see this video. Will Bitcoin give a chance to buy cheaper? Why? Well, on this chart over here, you can see this gray area over here and this over here. So this is the two borders that we discussed in that video. Actually predicted those borders that is going to be top for the Bitcoin. Of course, Bitcoin did not exactly top on those levels, so right now we are a little bit above those levels, but nevertheless we are around those levels. Those were our targets for the top formation of the Bitcoin, and then retracement into the wave 4 theory. This theory is still eligible, as you can see, and as you can see also, it became perfectly good support. If you watch that video, you will see multiple reasons why this is the case, how we got this zone. You need to watch that video. I'm not going to ramble too much over here to waste your time. Watch this video in our list, 2017 warning, as you can see on the thumbnail. So the next thing that you need to see in this zone is that the Bitcoin retraced twice to that level, actually multiple times on the 4-hourly chart, but if we switch on the 1 daily chart, you can see one retracement over here, perfectly good retrace on it, and then bounce back to the upside above level of 20 exponential moving average. And right now we are breaking 20 exponential moving average and actually retesting the same level of $33,000, which is that level that we marked. Make sure to watch that video to see why this level is important. Also, as you can see over here, as a resistance, Bitcoin respected this level way too good. So this is why this level, when we put it actually there, is very, very important. So now there is two theories over for the Bitcoin only. Either we're going to bounce back from this gray area that we discussed in that video that you need to check out, please. As you can see over here, if we bounce from this area as we did over here, then this is going to be the bottom for this correction before we start surging to the upside. Also, the next theory is that we may retrace to the $27,000, somewhere approximately around here, because we do have some sort of a level of support. But also I do believe that we may actually retrace to $24,000, between 24 and 25,000, 24.5, something like that, $1,000 of correction over here. This is going to be one of the major holdings, one of the major barrier as support to hold us back before we spike to the upside. This would be, I would count this as the Elliott theory wave 4 correction before we see wave 5. Now, those wave 4s can be very, very difficult to recognize. They can do something like this, they can do something, they can be actually normal one, they can do like this, they can do whatever they want, because they are very sloppy sometimes and you need to be careful. But nevertheless, the best way to determine how long was correction, just take the high, take the low, and that's pretty much it. See if we may actually have there 30 to 40% correction, and that would be pretty much it. Now, how we got this $24,000 correction, actually you need to check one of our video, which is this one. This video is you're going to like most probably, how we can actually retrace those 40%. But nevertheless, I can show you the Fibonacci level, what we did in that video. We put it on the high of $20,000 in 2017 over here, and then we draw all the way to the bottom of the bear market in 2018. So if we exclude a logarithmic chart over here, what you can see is that the 1.272% of retracement over here, which is laying down approximately on 24,677, which is that area over there. Over here, this is the zone that we predicted with the retracement, and also that level is also around 40%, which is wave 4 theory approximately number for the retracement in that wave. So make sure to observe the $24,000, $25,000 approximately, somewhere there we may retrace if we continue breaking those levels that we are breaking right now. So some of the conditions that we discussed in those videos that I showed you that you need to see, please do it. They're still very much eligible. So in order to correct in that wave 4 theory, we need to see a couple of rules respected over here, and that's, for example, breaking the market structure. In this case scenario, this is somewhere approximately over here, so we cannot break anymore. You know, if we break $30,000 over here as a last stop over here, we're most probably going to be further push in wave 4. The next thing is the bearish divergence on the higher and the lower time frames, and as you can see over here, we have on the daily chart over here one bearish divergence. Unfortunately, if you see on the RSI, the totally opposite thing is coming up, which means this is perfectly good bearish divergence. If we come back to the 1 hourly chart, you can see something that is called exaggerated bearish divergence, which pretty much means that over here we have a flat bottom on the RSI, while on the chart we are still seeing the higher high over here. So this is something that is forming slowly but surely, so be careful if you are trading this. The same thing is happening on the 4 hourly chart. We do have bearish divergences, but still don't see breaking up this structure over here. So be careful. If we break $30,000 over here, we are pretty much close to it. Be careful with trading. Most probably we will see the bigger retracement. This is good, you can buy cheaper Bitcoin, and most probably I will do the same thing. So be careful if you're watching this. This is the reason why we did this video. Over here in the Ethereum, very quickly to mention, the reason why we started to break to the downside over here is also because of the divergence. As you can see, we have one high and a higher high, while down there over here we have flat pretty much. And also one big ass divergence is happening over here, bearish divergence. We have one high and also higher high, while on the RSI we have weakness with the money flow into the market, and that's pretty much it. So this is the reason why we started to retrace. We may actually retrace to the 20 exponential moving average and bounce back, or if we break 20 EMA, the next stop would be over here $1,000. First, this is one of the psychological level that the Ethereum is going to most probably aim as a support, but if it breaks, we're going to determine the next of the supports in the next video. So make sure to hit that like and subscribe button, and also follow us on other social media if you are interested in short updates. Now, I think this is it for today, ladies and gentlemen. There is not much to ramble on for the Bitcoin and Ethereum. I think I covered everything. If you think that something is wrong over here, let me know in the comment section down below. What do you think about this correction in the Bitcoin? I want to thank each last one of you for watching our videos, and until the next episode, happy trading and goodbye.